Hello, and welcome everyone to a new weekly market outlook video. As always, we will start with looking at the economic calendar, and while looking at this, one thing should immediately pop to your mind when you see this, and that's the FOMC statement. It's the high impact news event of the week. Most of the volatility of all week will be in here. Please, I advise you to not open any trades before FOMC or even in the London or New York AM session before FOMC, because the market tends to be really choppy before that. It's hard to trade, and mostly if you win before FOMC, I would guess it's probably luck. So if I have to advise you one thing, just don't trade before FOMC on the same day. Wait until all the noise happens, and after FOMC the markets usually calm down a little bit, like 15 minutes or 30 minutes after, and that's the perfect moment for you to trade, or either the first day after that or the Friday, even though there's no news event. On Monday, as always, when there's no news event, I recommend you to don't open any trades, except if you see like a real A+ model, like the setup. When you dream about the perfect setup and you see that setup on Monday occurring, then of course you can trade it. But other than that, if something is not dumb clear, I would advise you to not push any buttons. For Tuesday, day before FOMC, you can trade, but personally myself, I will wait for Wednesday after FOMC happens. I want to see what FOMC does, which liquidity areas it will tap in, and after that I will open positions and trade. Let's dive into the markets now. As always, let's start with DXY. What we discussed last week is that I expected the markets to, especially the euro and the GBP, I traded to move higher due to this double cracking correlation with the highs and lows on respectively DXY and the euro. You see here that the euro made a higher low over here, where the DXY made a higher high. That's a cracking correlation, because if the euro makes a higher low, in the ideal world the DXY should make a lower high, which it obviously didn't here. So what I noticed last week was that my targets for the euro was the liquidity above this high over here at around 16545, and for DXY the sell side liquidity below these lows. And as you can see, we perfectly traded below those lows, so our target is breached. So what will happen next? Actually, if I gun to my head, if I have to determine what will happen next, I still expect us to trade higher, because we also created a PSP now. We had a small cracking correlation at the highs now with the GBP, but in here you see this candle closure closed bearish, while on the DXY it also closed bearish. Well, actually, whenever it closes, this candle closes bearish on the euro, it should close bullish on the DXY, because they are inversely correlated from each other. So this one should have been bullish, or this one should have been bullish. But now, as you can see, we traded above these highs, broke above these highs. Now we traded back into this daily fair value gap over here, and also this bearish daily fair value gap over here for the DXY, and we've been trading lower since. So what I want to do now is I want to wait for this day to finish, and if this day finishes not trading below this low over here for the euro, and not trading above this high over here for the DXY, then I want to switch then I can confidently say I am bullish for the euro and the GBP. But now I want to wait this day to finish, so I'll probably will be touching the markets tomorrow if this one closes above this low, and if this one closes below this high. So gun to my head, what do I expect? I expect us to trade higher for the euro, and I would love this rejection block over here, the liquidity above these bodies, like 1.16868 to trade to. So let's see if that's a possibility. Then move over to gold. As you can see here, gold is very interesting, because what we've discussed last week was that we have now a huge SMT at the highs between gold and silver. A huge SMT. And what I wanted to see was to gold trade either higher to also push for these highs, or I want another cracking correlation on the lower time frame to happen so I can switch my bias into bearish. And what happened now for gold? We have the lower high over here on gold, higher high over here on silver. Then on the lower time frames we have a lower high over here on gold, higher high over here on silver, and this one candle closed bearish, where this candle on silver, the same candle, same day, the 5th of December, closed bullish on silver. So what I expect now, if same scenario as for Forex, if this candle doesn't trade above these highs over here, above this liquidity over here, then I would confidently say that I want us to trade lower on either gold and silver. But because gold made the lower highs over here, I see gold as the weaker pair of the two, and I would short gold in this instance. And what I'll be looking for as targets is the liquidity below this low over here, below this low over here, and below these lows, whenever, and that's very important, we don't create any obvious bullish cracks. So we're now still bearish, but whenever something bullish happens, like obviously on the bullish side, then I would like to switch my bias. So let's just patiently wait for that and just follow the markets, stay away from executing when you're not sure about any outcome, and that's my advice for now. Then last but not least is Bitcoin. If it loads, it's loaded over here. Bitcoin's really interesting. What I've been saying last week is that I have been indecisive on crypto, because we had this sharp breakdown over here and everyone turned bearish for Bitcoin, and Bitcoin is going to go to 30k, 20k, you see it everywhere, and I still said that I was pretty indecisive. But what I see now for Bitcoin is we have no single crack in correlation on the bullish side. If you compare it to Ethereum, we have just traded last week. You see that we have this doji candle traded up into this inverse fair value gap over here on the weekly chart. We also fully filled this weekly fair value gap on the weekly chart, bearish fair value gap, and we closed bearish on the Bitcoin candle for the week, where we closed bullish on the weekly candle for Ethereum. So same scenario as with gold and as with Forex. If we don't trade above this high over here on Bitcoin this week, we can confirm this as a precision swing point. So a swing point like this will be a swing high with a lower high to the left of it and a lower high to the right of it. And when I can confidently say this is a precision swing point on the weekly chart, I have another clear bearish signal, also following this order flow with the cracking correlation over here with the highs, trading into this inverse fair value gap over here, trading into this fair value gap, weekly PSP, and then I would confidently say that I expect us to trade lower into the sell side liquidity pool over here at the 74k level. That is my analysis for this week's price action. Be safe, be aware of FOMC, don't do any stupid things, don't focus on the money, focus on your trading, focus on your system, focus on your routines, and that will bring you way further. Thank you all for listening. I hope to see you in the next one. Take care.